Back to the chart with Big Boss Crypto, bringing you another market update and short-term trading analysis. Well, today we saw the market maker move the price down aggressively, and he's moved back up again this afternoon, European time. And he's shown us the structure that he uses all the time. I was able to take some trades this morning and take some profits. We have the FOMC speaking today. I'm warning you, this week is gonna be volatile, but us as day traders, we can take advantage of that and make some profits. Well, stay tuned. I'm gonna show you where the points of interest are. Okay, let's start off by looking at the chart. We saw a big red candle this morning where the market maker moved the price aggressively, liquidating a lot of longs. And I saw that and marked it off in the chart, where potentially we can take profits from the longs, because as we know, I've said it in almost every video that I've made, the market maker always touches this area at one point or another, and that's because there's an imbalance in the chart. And by imbalance I mean there's a lot of sell orders in this candle, a lot more than there are buy orders. And as you know, the market maker needs to fill those. That's his job, that's how he makes money. But okay, we could see also from earlier videos that we formed some kind of structure, and I could take advantage of that. I'm looking at the 50-minute time frame, and I saw this morning that we formed somewhat of a double bottom formation, where the market maker moved price down aggressively, and as you can see, there's a huge wick. If I'm gonna move this away a bit, there's a huge wick here, and that indicated that price might reverse in this area. So I took a look at the lower time frames, saw that there was a huge wick as well. So that was when I started building my longs and looking at the interesting points in the map, and that was this big candle, and took some profits here. And as you can see, the market maker knows what he's doing. It was on the dollar where they reversed price, almost on the dollar, of the big volume candle here. Okay, so this system works. Now we can see that they're reversing the price, and as you know, this is the structure that the market maker uses. We saw the double bottom today, we saw the first leg up today, we saw the retrace, we saw the second leg up, we saw the retrace again, and he always tops it off with a double top. First retrace, second leg down, second retrace, and then he forms the double bottom, and the price starts over again. Draw this every day, because the market maker uses this structure on every time frame, no matter what. And this time I used it on the 50-minute time frame, and we can see where we have points of interest also on the higher time frames as well. So I took some profits, and now I can see that we're forming somewhat of a double top here. We'll see how the price moves, but we are in our first leg down, and I'm currently in a short where I'm considering to taking profits this day at least, but I'm gonna show you what I'm targeting. Okay, so I'm gonna show you some interesting points where the market maker has made some volume candles, and my targets aren't random. I use targets that are points of interest for the market maker. As you can see, we have two volume candles here. It's this candle and it's the previous one. So let's mark it off in the chart. They have recovered some of it, so here is where I mark it off. I put it in red so I know that it's a short, basically. Do we have another point of interest for the market maker to take? Well, we have some candles here, which are high volume candles. Let's mark them off as well, because they will get recovered eventually. Half of it has already been recovered in the first retrace actually, but not all of it. So there's some liquidity here for the market maker to grab as well. Let's look at this one. This bad boy has been recovered. And okay, this looks fine and dandy for the downside. We also have a high volume candle on the upside, which is interesting for longing. I'm gonna mark it off as well. And I'm gonna mark it green so I know that there's a potential long opportunity. But we'll see when the market maker will recover it. Okay, let's zoom out a bit, look at the 1 hour time frame. What can we see here? We do have this zone up here as well. And I would say we are in the first leg up on the 1 hour time frame. So if you're a longer term day trader, I would say we are in our first leg up. So maybe we're forming a retrace down and then we're gonna move into these zones. Maybe. It depends on the market maker. Just because the zones are there doesn't mean he's gonna take it immediately. He can wait a year until he takes it. He can move the price down to 3K if he wants to. But okay, let's take a look at the liquidation map. This is the latest one. As you can see, there are a lot of long liquidations from 19.5K to, I would say, up to 20,250. So that's an interesting zone. Let's see if we have some, we have a zone here, which we marked off last week. There are a lot of liquidity here, and there's been some sell orders previously from the market maker. So that's something to keep in mind. Let's look at how the longs are looking. Oh, it's quite low. We have some liquidity down at 18.3, and of course we have from 17.3 all the way down to 16.8. We have a lot of money for the market maker to grab. And we know also that we have the FOMC this week on Wednesday. So I might be careful longing, because we know that the economy is pretty bad, and we know that they're gonna interest hike of 75 basis points at least. But they're talking about 100 basis points, which is devastating for the market, but good for the dollar. So let's keep that in mind when trading this week. We know our zones at least, we know how the market maker moves, and we know that the FOMC meeting is on Wednesday. So could the market maker be moving price, grabbing liquidity as much as possible on the upside, moving like this, grabbing the liquidity zones on the liquidation map, and then moving it down? Well, let's see. Okay, so to summarize, we saw a bottom structure this morning, and I took some profits when the market maker had shown his presence, and that was in the big volume candle where there was an imbalance. So I took some profits there. I'm looking for shorting in the very short term. I'm gonna exit today at least and wait and maybe start building some shorts when he moves the price up to 20K or 20.5K. As I said earlier in earlier videos, none of this is financial advice. You do whatever you want to do. This is all for entertaining and educational purpose only. I'm trying to make you understand how the market maker moves price and where the interesting zones are for us as a trader. But as I said also, something may be brewing for the FOMC. We saw that last time FOMC had a statement where they moved price aggressively to the upside, and then reversing it as soon as the news came out with a big volume candle. Maybe it's the same play here. Well, we'll have to see on Wednesday. As I said, this is a big news week. We have a lot of news coming out. We have the FOMC statement, the interest rate hike, we have employment news, we have also the Eurozone news. A lot of news, and there's going to be a lot of volatility, which we as a day trader like. So we're going to have to take advantage of that, but not over leverage, of course. And the third and final point, the market maker is starting to smell short liquidations in the near term. We saw that zone from 19.8 to 20.5 approximately. That's a lot of liquidations for him to grab in the near term. That's something we have to keep in mind. It doesn't mean that he's gonna get there tomorrow, but there's an interesting low for him at least. That's it for today. I'm gonna come back with another market update on Wednesday when the FOMC came out, and we're gonna have to see how the market maker has been moving price and where the interesting points are on Wednesday. Good luck everyone, see you soon, bye.